Okay, folks, we are live, and we have a lot of headline risk out there in the market right now. Uh, I found a tweet on Twitter. It's the only tweet that I found so far, or news item about the health of the president of Iran. This has not been confirmed, but it says that he died in the crash. Uh, the question is it really fog related, or is this more of a cover for a potential Israeli attack on Iran? So we're looking now at the price of oil, and I'll be honest with you, I had expected a more of a bid under oil with the news, but it's not happening. Can somebody let me know if that audio is okay? Oh, thank you, Sean. Appreciate it. Mr. Pete, welcome. Okay. So I'm very surprised we don't have more of a bid here on oil. There was a tanker that was struck in the Red Sea. It was a Greek flag tanker carrying Russian crude to China. Okay. So I guess we're not going to get much of a bid here on oil. Let's throw up an alert. Now it's actually negative. Very surprising. Very surprising. Okay, let's check in with equity prices. Let's see what's going on there. Let's check in with the E-mini contracts. And we are beginning the week with an uptick. And again, with the attack over, not attack, I shouldn't say that, with the helicopter crash in Iran, I'm telling you right now, if there's any potential Israeli involvement in that attack, you're looking at a huge conflict over in the Middle East. But right now, the market's saying there's no there, and you got to trade the market that you're given, not the one that you want. So E-minis trading up at the open here, near session highs. Looking at the mid-cap space, they're flat at the open. I think that these break out. In fact, they already have. This is only a 5-minute chart, but I think this breaks out further. Let's bring up the NQ. This is the NASDAQ 100. NASDAQ 100, a little bit of a squeeze going on here. Bollinger Band squeeze. You can see the Bollinger Bands in orange inside the Keltner channels. And you have a squeeze firing off. This is a very solid open for the equity markets. It bodes well for the morning. Dow Jones up nearly 0.1%. Small caps, they're up spot 1.3%. So out of the gates today, folks, we have a strong market. They gapped up. They're staying up. Let's check in with yields. Now, yields are beginning the week with a move up higher versus Friday's close. But they're coming off the session highs. So let's do this. Let's go to a 15-minute view. This is a 30-minute. You know what? It'll do. I want to know. We closed out the 10-year yield at resistance. Therefore, the 10-year bond at support. A new weekly higher high would have a breakout on the 10-year. Back to that 5-minute chart. Looks like we're coming in, though. We're coming in. Let's take a look at the US dollar. The dollar is opening this session up relative to its close. To be fair, it drifted up higher in the after-hours session. It's down versus the after-hours session on Friday. Now, looking at commodities. Well, actually, let's stick with the currency arena for a moment. Euro, that's the Canadian dollar. Euro, that's down fractionally. This had a good week last week, and we can't ignore the fact that the euro is in rally mode, and we are at the precipice of potentially breaking out got to hear my alerts, potentially breaking out above weekly resistance. We came close last week. Yen, twice. The yen is up on the session. So if you get the euro yen moving in tandem, that's going to put pressure on the dollar, and that's going to set commodities on fire if we get a pullback in the US dollar. Bitcoin, that's down about a percentage point, and that's a risk on asset. Very strange that it's trading inversely in such a severe manner relative to the equity markets. Checking back in really quick with crude prices, they're back positive. I'm very bullish on crude, and I did a video over the weekend. It's posted on the website. It's posted on YouTube. Check it out. It's my technical analysis on light sweet crude, but I forgot to go over a couple of charts that I thought were pretty interesting. And if you take a look at a 4-hour time frame, you can see that we have a squeeze setting up here. Pretty loose one, though, to be fair. And a squeeze that's fired off on the 15-minute chart. But still, not much fireworks here on crude prices as of yet. Given the events in the Middle East, I'm very surprised. Very surprised. Strength in the equities, weakness in oil. I didn't expect this. I expected the exact opposite. I expected equities to pull back, oil to rally. Okay, let's take a look at precious metals. Gold up a 1/4 percentage point. It was up higher a few moments ago. Copper, not that this is a precious metal. Wow. Up over a 1/2 percentage point at the open here. We're going to be talking a little bit more about copper in a moment. But copper looking really, really good here. It wants to go up. This is a bull flag setup. I'd like to get a pullback in copper. I'd like to sell some puts. Let's stick with the metals for a moment. I didn't do nat gas. I need to go back to energy in a moment. We have silver up another percentage point. This thing was ripping last week. We own it. We're happy with it. So silver looking the bomb here. It was up higher, a little bit of a fade off the highs. You got to expect a little bit of give back on these names at some point in time this week, meaning gold, silver, copper. But I think that's when you begin to load up the truck. This is not in my own opinion. I think the low hanging fruit in this market, if you want to make the easy money, is in the commodity space. We've been talking a lot at the Contrarian Trader about commodities lately. It's the new bull market. It is the AI of uh, of everything right now. It's how do I put it? Inflation is driving commodities. AI is driving energy. We're going to go over this in a moment. I have a chart, and energy is going to be in huge demand in the coming years. You need copper, you need uranium, you need nat gas, you need oil, all that stuff. It's going to be a wild ride for these commodities for the next probable 5-10 years. So we spend a lot of time on them, and we will continue to spend a lot of time on them. All right, so we did silver. We did. Let's stick with the metals for a moment. Palladium did very well last week. That's pulling back a little bit. Platinum, that's up just shy of a quarter percentage point. Was up higher, now fading a little bit. All right, let's shift back to energy for a moment. Nat gas. Nat gas is just on fire of late. Up nearly a percentage point off of its session highs at resistance. RBOB gasoline prices, gasoline up nearly a quarter percentage point. Let's check out the weekly chart here. We're breaking out on a weekly time frame. So they took us down. All right, so here's your upper band of resistance. The ladies will like this color. And here is now your floor on gasoline. So I think gasoline prices, I don't know why I went purple again. Gasoline prices look like they are ready to break out very, very soon. Now, unfortunately, I think home heating oil is going to do the same. I'm not as bullish on home heating oil, but I'll put it to you this way. I took a look at the weekly charts already on home heating oil. I'm calling my dealer tomorrow to fill up my tank so I get these prices now before they begin to rip up higher. So we've had a nice pullback over the past several weeks. Time to fill up that tank. Yeah, no doubt about it. All right, let's get to agriculture. We're along of rough rice. Now, rough rice had not a good close on Friday, but we are nice to see up. Now, the reason why we are long of rough rice is that there was a setup for a Bollinger Band squeeze. But we just fired off a red candlestick, and I'm not happy about that. So I'm probably going to be out of this trade on a new weekly lower low. Here's my stop down here. I'm probably going to raise that up. Okay. This is thinly traded, very thinly traded. You would think that all the people in Asia and South America, they eat rice, that you'd have a lot more volume here. You don't. Okay, let's check in with the other names out there. I don't want to do soybean meal. Let's go to the big three. Corn. Let's go to the weekly chart. Now, corn broke its weekly trend. They got a 3-week uptrend, and it pulled back. We're probably going to pull back down to this lower band of support in red, and we can revisit whether or not we want to buy it there. Right now, no reason to. Soybeans, good week last week. At the precipice of a breakout, we'll watch this very closely. Wheat, weekly chart, bearish, key reversal. So this is off our watch list for this week. We traded wheat, just scalped. That's it. It's nice to put these trades on at night, and then you wake up, and if you haven't been stopped out, you have a nice little profit when you wake up. So that's why I like futures. But you got to use, I'll tell you right now, if you're going to trade futures, if you're not going to use a stop loss order, you can't be in this. You can't do it. You can't do it. So please, you got to use a stop loss order. I usually put in a stop loss order right below the previous 4-hour candlestick. So that way I'm not taken out really quickly. And the only reason why I'm buying is because I see a bottom. So if it breaks that support level, I don't want to be in it anyway. So please use a stop loss, but keep it not too tight because they'll take you out. Commodities are volatile. Okay. Let's check back in with crude. As a matter of fact, we'll bring up, I'm along of the mini contract. You can see here's my stop here. And we're going to probably, if we get a breakout, we're going to tighten that up a bit. Okay. I think we covered it. Let's check back in with Bitcoin. I'm very surprised about this pullback on Bitcoin. All right, let's say hello to folks. I skipped that. I said hello to Pete. I said hello to Sean Tallan. Hey, brother. Welcome. Oh, Denny. Hey, brother. Welcome. Franklin. Did you get my message, Franklin? I sent you a private message about the about Trend Spider. You may have already replied back to me for all I know. Talon. Yeah, we saw that. It was off of its highs. You probably saw it when it was at the highs. As a matter of fact, let's bring that up right now. Woo! Now up over a third. Very nice. Hi, Jody. Paul. From Southeast Florida. Love it. Miami? Miami area? TZ Burton. Welcome. Michael Anthony. Is that your middle name? My middle name is Anthony as well, if it is. Oh, what about Iran president was killed? You know, as I said earlier, Michael, you trade the market that you're given, not the one that you want. Okay, thanks, Franklin. Should it matter? Absolutely, absolutely, no doubt about it. Me personally, I think that they're blaming it on fog right now. But how often do you hear the story change from the initial report? So hopefully it is just a fog thing. They're blaming it on weather. Hopefully that's all it is. I'm not wishing for war, but my God, if if they start blaming the Israelis, buckle up, because this little rally you're seeing here at the open on the Nasdaq and in equities in general is going to fade really quick. Gold is going to continue up higher. Oil is going to skyrocket. Yields are going to drop like a rock. Bonds are going to move up higher because money's leaving equities going into the bond market, and volatility is going to spike up. We're going to be talking more about this hourly chart of the VIX in a moment. So this is the market that we're opening up to for the beginning of the new week. Again, I'm taken by surprise here. Maybe this is going to change. Maybe the street is buying the fact that this is a fog-related issue, and they're good with it. But I'm going to be listening very, very closely for changes, rhetoric coming out of Iran about the potential for this being an Israeli attack. It's not out of the realm of possibility. They've been firing missiles at each other. Okay, let's get to it. All right, coming up this week, economic data. Look at all these Fed heads coming out this week. My God. Oh, my God. We have Chair Powell. Oh, he was already out. Monday, the vice chair. More Fed governors. More speech after speech after speech after speech. Existing homes. So this is a real quiet week. You get the Fed minutes coming out on Wednesday. But overall, this is a quiet week. Initial jobless claim. There was no there last week. Services PMI, manufacturing PMI, these matter. Durable goods, very, very important number coming out on Friday. This is by far the most important number. Consumer sentiment, we have a 10 a.m. report coming out on Friday. This could move the market, so beware of it. So alert up on your calendar. All right. What else do we have up here? Oh, we have the CME Fed Watch tool. Just spilled water. CME Fed Watch tool. They've been predicting September is the month they're going to go with a rate cut. So we're focused on September, and we're still in the mid-60s. This has been drifting down over the past couple of days by a couple of percentage points. We were as high, we were up in the 70s, and then we faded now down to 64%. So a lot can happen here. July, I believe there's no hope here. Yeah, there's no hope. November, they're pricing an 82% probability of a cut. So equities are pricing in a cut in September. Equities can still rally. Beware the headline risk, though. What else do we have? Earnings coming out this week. Palo Alto Networks, that's a big one coming out after the close on Monday. Zoom, not such a big one. Lowe's before the bell. Home Depot reported last week. AutoZone. What else do we have here? Target, they're coming out before the bell on Wednesday. TJ Maxx. I love TJ Maxx. It's a great store. NVIDIA. That's going to be, that is earnings week. NVIDIA is earnings week. Snowflake to a lesser extent, much lesser extent, but that's an interesting one nonetheless. On Friday, do we have anything interesting here? Intuit, Workday, not really, nothing really interesting. So the PIMMAC daddy of the week is going to be NVIDIA to a lesser extent, Palo Alto Networks. Target should be an interesting one. Lowe's, health of the consumer. We're a consumer-based economy, so it matters. PE multiple, trailing PE multiple, we are at 34.7. Now, it's expensive market, right? This really doesn't tell the story. What really tells the story of how this market is strongly overvalued is the Buffett indicator. At current, the total stock market value is at 55.84 trillion. So we are 197% beyond the GDP of the United States. So this is the Buffett indicator. This is how he values or undervalues the price of the market. And at current, this is one expensive market. We are at a 2 standard deviation move on this indicator. So we've been there before, back in 2000. That's not good. And of course, the big overshoot in 2021. So just beware, folks. We don't spend much time here once we get up here. The last time before 2000 that we were there was around 1968. Buckle up. Now, I mentioned earlier volatility. Now, volatility, the VIX generally moves inversely of the S&P 500. Now, the volatility index just hit a lowest low since 2019 at 11.99. So let's think about what's transpired here, right? You've had COVID, you've had subsequent shocks to the economy, and right now we are the lowest that we have been on volatility, yet we have debt, U.S.-driven debt at all-time record highs, and it's still climbing. We have the consumer. The consumer, this is out of place. I want to come back to this. Scratch the consumer. I want to retrace my steps. I wanted to segue from the Buffett indicator into revenue growth. Now, remember this chart as we talk about this. We are extremely overvalued in the equity market. Doesn't mean it can't go up. I'm not saying sell stocks. I'm saying tighten stops, but I'm not saying sell stocks. I think it could still go up higher. Now, when you take a look at the fact that not only are we expensive, but the S&P 500 year-over-year revenue growth of 4.2% for Q1 2024, which is in the estimate above 3.5% on March the 31st. So revenue growth has been dropping of late over the past couple of quarters, but we saw a bit of I'm just reading this. So earnings growth is not necessarily going. You want to see earnings growth rising. They're not, and they should be. Now, the one chart I wanted to talk about, keep in mind that we have Iran in the news. We have a tanker struck by a Houthi rebel missile in the Red Sea. So we're looking at a volatility index here. We're down over a 0.5 percentage point at the open on the VIX with that news in sight. But the thing I want to point out is this. This is an hourly chart of the VIX. Take note of this setup. What happened to my chart? Here we go. I don't know how that happened. Okay, so here you have a higher low. And we broke out on an hourly time frame on Friday. This is not real time. RSI oversold. It can go lower. And we are trading within a descending wedge formation on volatility. So I suspect that at some point in time this week, we're going to get a spike up in volatility. It doesn't necessarily mean that the equity market is going to go into free fall. You got to sell your stocks, blah, blah, blah. It doesn't necessarily mean that. I'm just saying that expect a spike up in volatility and a sharp pullback in equities at some point in time this week. There's a lot of energy built up here to the downside. This is going to get released. So, and it's probably going to be to the upside. And this gap up here on the 13th, this was on a daily time frame, a daily descending wedge formation. And I said to my members on Market Up, I said, this is going to fire off. So be careful. We're going to get a rally in the VIX. We're going to pull back in the equity markets. We got it. I'm saying it again. We are going to get a rally in the VIX and a pullback in the equity markets. So if you're going to go into this week buying stocks hand over fist, you may want to scale back on that buying a little bit. Preserve some cash. Wait for that pullback and then put it to work. I'm just saying that this is a bit oversold. It needs a release, and that's your opportunity to buy stocks. Now, keeping in mind, again, please keep in mind the Buffett indicator as we go through these charts. We have equities that are very, very overvalued. Global corporate defaults have surged to a total of 55 so far in 2024, the highest number since the 2020 pandemic. This is in line with the 2023 count of 25% above the 10-year average. In April alone, global bankruptcies increased by 18, the largest monthly jump since 2020. Defaults have been largely concentrated in the U.S., where the 32 defaults have occurred year to date. The vast majority of defaults have been seen in telecommunications technology, with 20.9 billion of debt defaulting. Higher interest rates are taking a toll on the corporations. So if you wonder why they're going to cut interest rates going into a so-called economy with a GDP, which the Atlanta Federal Reserve is saying is going to be over 4%, they're going to cut rates. This is why. The banks are on life support. The regional banks are on life support right now by the Federal Reserve. The banking system snapped the March of 2023, and they've been a life preserver ever since. So things are not what they seem right now. The Federal Reserve is doing a lot more than what it appears. So beware here. Now we have corporate pressure, and we also have the consumer. All those stimmy checks are gone. The history, they don't exist anymore. Households now officially run out of excess savings, reaching the lowest level in the past 5 years. There's the chart. Let's keep the good news coming. And this is not, I want to, before we go on to the next chart, because they're not happy charts. This is not a statement saying that you should sell equities. It's just getting you away from the CNBC mentality of looking at things and go, all is well. They bring on their slick back salesmen and they try to sell you stocks. They sell you hopium. I'm not here to do that. This is the reality that we're trading in. I'm long of stocks. I'm long of commodities. I have a short position on it. So we're diversified. So I'm not looking to sell good stocks right now. I'm looking to add good stocks right now until such time as the market says no mas. How do we measure that? We look at the 10-year yield. We look at the yield curve. The yield curve was down last week. Therefore, I'm not worried. I'll worry when we break out on the yield curve. When that steepens, I'm going to cash. I'll be going short and going to cash. U.S. households now spending an all-time high, $573.4 billion on non-mortgage interest payments for the first time in history, is roughly the same as mortgage interest payment. So more pressure on the consumer. The banks are doing really well. You wonder why the banks are doing well right now? Defaults are rising, but they're still manageable. Yet they're making a lot of money on these credit cards. Auto loans. Auto loan series delinquency rates surged to 2.8% in Q1 2024, the highest level since 2010. 90-plus day delinquencies have been rising at a pace last seen during the financial crisis. Auto loans held the U.S. household jumped by $9 billion in Q1 to $1.62 trillion, an all-time high. 1.62 trillion. This means 45 billion of consumers' auto loans are on the brink of default. Meanwhile, Car insurance inflation jumped to 22.6 in April, the largest one-year increase since the 1970s. U.S. households are missing loan payments as if there is a recession here. And I forgot to bring it up. I follow her often. She's very, very smart. And quite lovely indeed as well. I don't know. Here she is, Steph Pomboy. Steph Pomboy, real sweet lady. Smart. Got to say, I'm sitting here. This is this past weekend. Got to say, I'm sitting here trying to compile my charts for my weekly. I guess that's a live stream. It's an embarrassment of grim riches. Every series I look at is hitting extremes in ugliness. Can't remember this kind of deluge of bad data in a very looning time. I don't know what that, a long time. The recession is here, my friends. That's her statement. The recession is here. Okay, so while the recession may be here, so is a major, major bull rally in commodities, and we want a part of it. So you can see here that here's the S&P 500, 9.1%. The CRB commodity index is up about 9%. So the CRB commodity index as a basket is up on par with the S&P 500. So where do I want to put my capital? I'm looking more towards commodities. Cocoa, all-time highs. Orange juice, all-time highs. Copper, only going higher. We're going to talk more about that. Silver is on fire. Crude prices to a lesser extent. Gold, believe it or not, is lagging a little bit here, but I think that's going to play catch up. West Texas Intermediate crude, also a bit of a laggard. Coffee's playing catch up already. And live cattle is just coming off of all-time highs. It had a huge year last year, to a lesser extent this year, but still in a pun intended bull market. I'm long of rough rice. I want that to go up higher. Let's talk more about copper. Copper is, I thought this was an interesting chart. Here's this tweet. Copper from Michael Kramer. Copper and PC Core services a mild relationship. I would say that's an understatement. This is a pretty in lockstep, perhaps a bit of a lag on HG, which is the symbol for, in blue, for copper. Now, the PCE Services Core is in orange, and you can see that the PC Services is now hooking up. Copper is leading the charge. But a very interesting chart. And the reason why I'm so bullish on copper is because, where is my, here you have it. AI is poised to drive 160% increase in data center power demand. You need copper. You need copper for all that. The Tesla build-out stations, those charging stations, copper, tons of it. Copper is going to be in huge demand for the next 10 years. Oil. Now, we've been speaking quite a bit about oil this evening because oil is breaking out. It's been a laggard of late. Heck, even natural gas is beating oil right now. There's your breakout last week on West Texas Intermediate crude. Now, with the build out in energy demand, you're going to need another product. And one of our members, Franklin, is big on this one, uranium. Uranium is set to launch. We're going to go over a chart in a moment. So excellent news. Italy confirms its return to nuclear energy. My, how the world has changed. I remember back in the 1970s, early 80s, the war by the Greens against nuclear energy. They made a movie about it called The China Syndrome with Michael Douglas. Talk about the war against nuclear energy. Now, all is forgotten. You had Chernobyl, all that stuff back then. And now they're back. It's back big. And uranium, which has already had a stellar run, it's only going up higher. Let's go to this one here. Here is the monthly chart of uranium. Big breakout on the month. I would love to see early next month a bit of a retrace on uranium. Okay, our alert is set. RSI, what's it doing? What's this momentum telling you? It wants to go up. Stochastics, what is it telling you? Momentum, it wants to go up. Uranium is going up. It's going up a lot more. This is just the beginning. I wanted to talk also about PayPal. Now, PayPal is a stock that people have forgotten. Now, I saw a note over the weekend about their revenues. I said, okay, let's take a look at their revenue growth because the stock has done absolutely nothing. Look at this consolidation, yet their revenue growth is growing dramatically, yet there's been no increase in the share price. If anything, at best over the past several months, it's flat. It has not participated in this rally, yet momentum is building to the upside. RSI rising slightly. I actually have a bit of a breakdown on the month, and we're down on the month. I got to tell you, I'm a put seller here. I want to sell puts on PayPal. You're probably not going to get much premium because there's nothing happening here. There's not much volatility, but I'm liking this stock. And look, this is the first time I'm looking at the weekly chart. The weekly chart, we broke out back here above this fractal resistance level in April. We were rejected here at this volume shelf at $70.54. Now we've been drifting down, and last week it popped its head back above this fractal resistance level. I'm liking this. And again, momentum on a weekly chart and a monthly chart, higher lows. We like that. Daily view, very similar to the weekly chart. We like it. PayPal, bullish. But probably more as an investment, we're probably going to be buying it as soon as tomorrow. So members, I will send out an alert if and when we do. Probably just going to, if I don't sell puts, I'm just going to buy the common stock and initiate a position on PayPal. Let's do some chart requests. What do we have up? I'm looking at LAC. Looks like LAC. Folks, if you haven't liked the video or the live stream, you can like, subscribe. You know the deal. I'd appreciate that. It helps me with the YouTube algorithm. And I want to be in good favor with them. Looks like LAC has bottomed. Let's check out LAC from Mr. Michael. If you have a chart request, drop in the chat box and just let me know. LAC from Michael. Lithium Americas. Actually, I have seen this chart before. I have seen this company. All right, so here's the deal. It's a real simple trade, okay? If you like the company and you think it's got a future, it's got to hold. It's got to hold 389. So I would do this. This is a monthly chart. Play connected dots. Get your crayon out. Connected dots. If you're going to buy it, you got to use a stop loss right below the lows of February. And that low was $3.81. We closed out the session on Friday at $4.47. Let's go to a weekly view, see if it looks any better there. Consolidation. Good volume last week, I will say that. Daily view. Nice consolidation. I'm good with this. I mean, it's a spec trade, but I like consolidations. The longer the consolidation, the greater the validation of any up move. This one here, I'd be looking at the short interest on the name. If it has a big short interest, a potential short squeeze, I would be all the more interested in the trade. So I would look at the total number of shares short, divide that by the average 3-month daily volume. That'll give you the number of days to cover that short position. I don't necessarily use the number of shares as a percentage held short. I do that division, and that gets me more excited about the strength of any short squeeze. Paul, NEE. NEE. Okay, Nextra Energy. Nice little breakout on the month. The month's not over though, right? So we have a few days left to go, and we don't want to look at a monthly chart and say, oh, gosh, golly gee, we have a breakout. Well, it could fail, right? We don't know if it's going to hold this yet. So I wouldn't get too excited yet. I would be looking for at the weekly chart more for a potential entry point. Now, I will say this. Apparently, I've gone over this one before, and I'm noting my prior artwork here, and I must have noted the downtrend line on NEE, and we now have a retest of that breakout point because we broke out back here in December, did a retest in February, and it's been off to the races ever since. This is a very similar chart to LAC. Weekly view. Nice little run here. You've had 1, 2, 3, 4, 5 consecutive up weeks. You know, be careful here. And you've only had one down week in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You've only had one down week in 12. The probabilities of a pullback here are growing exponentially. So be very, very careful of initiating a new position here. I would want to see a pullback and a retest of a support level. I'm not a buyer here. Can't. If you're long, I'm not sure if this is optionable, perhaps sell some calls. I love the energy space. XLE broke out last week. I'm not sure what space this is, the subspace, subsector, but be careful here. I would be a buyer. I want to see a higher low on price. I want to see a ruthless sell-off and then a bullish key reversal bar. If you don't know what that is, I have a 5-part video tutorial, my top 5 favorite candlestick patterns, link below. Take advantage of it. It's free. But I want to see a pullback, a retest of a support level, and a reversal to close back above it. Bullish key reversal. Revenue growth is declining with a share price that is rising. I don't know what the EPS growth is, but I'm a big believer in following revenue growth versus earnings because earnings can get manipulated. Revenues, that's sales. Very much more difficult to manipulate. KK, welcome. Welcome. Oxy. I love the energy space right now. I think oil is going to move up higher. Energy's already broken out. We have a daily breakout on oil prices. We have potential drama increasing over in the Middle East. We had the tanker that got attacked in the Red Sea on Saturday. And yes, Saturday. And we have whatever's going on over in Iran right now. Lord knows where that's going to go. So Oxy has broken out. This is a monthly chart. We broke out in the month of March. We did a retest this month. We have a lot of overhead supply here, lots of resistance above. However, I'm a buyer. Weekly chart. Nice. So we traced. We need a breakout here. Momentum still going in the wrong direction. Our side did a breakdown. We need a breakout here. This needs to get resolved. So if I buy here, it's going to stay very, very small and wait for the breakout, wait for the retest, add more as that unfolds. And then once we get a breakout on up and above, let's call it, I want to see a weekly close above 66 bucks a share. Then I'm an aggressive buyer of Oxy, not until then. Daily view. Daily view, higher lows and a breakout on Oxy. I think things are improving here quite a bit. RSI has broken out. So we've gone from a big downtrend to now being in the beginning of an uptrend. Stokes confirming the same. Bullish on Oxy. However, you want to leg in. You want to just take it easy. Accumulate shares. Don't go all in. Let's go to NVIDIA. NVIDIA reporting earnings this week. I booked profits on NVIDIA on Friday. I think it was Friday, I believe. And we're out of NVIDIA. I don't want to be long of it into earnings. We had a profit, but I didn't have enough cushion to absorb a sell-off on earnings. So not that they're expecting one. The market makers are pricing in not much of a move on earnings. So I may buy back in after earnings. I just don't like to hold positions into earnings if I don't have a big buffer on these big tech stocks. So NVIDIA, it actually broke down last week. It broke out on the 15th, failed to hold it, showed some relative weakness here. But the monthly chart, it's a breakout at current. Weekly view, a little bit of topping action here on NVIDIA. But I'll be buying back in. If they sell it off, I'll be buying back in on NVIDIA. Let's talk about Lemonade, LMND. Now, we're long in this position. I'm probably going to be adding more. In fact, let's illustrate the why behind it. Let's go to let's bring up the squeeze. Okay. So to begin with, this company has a lot of shorts in it. There's a potential for a major short squeeze here. These shares were trading back in 2021, nearly 200 bucks a share. We've been accumulating a position over the past couple of weeks on Lemonade. We doubled it up last week. Why? We have, in black, you have Bollinger Bands. In green, you have the Keltner channels. So when you get the Bollinger Bands trading within the Keltner channels, that is your Bollinger Band squeeze. And this sucker is setting up for a big short squeeze, which I believe began last week. We broke out on a weekly time frame. I think that we're going to get a retest of the breakout point this coming week, and this gets resolved up. We're trading above the 21 period and the 5 period EMAs. So we have the moving averages stacked in the right direction. I think that this gets resolved to the upside. So LMND bullish. Now, let's leave it off with what symbol was it? Let me go to the members area. I got to remember which symbol it is. Apple. Apple. I think this is getting interesting. I've been a big bear on Apple, but I'm beginning to change my tune. So this is a weekly view of Apple. And take note. Let's get all these lines out of here. Clear all lines. So let's start fresh. So these are the automated trend lines. Folks, we're using TrendSpider, automated technical analysis, seasonality we have here. I'm going to tell you what month Apple does best in. There's a link below, 35% discount code, CON35. Take advantage of it. And this is the automated trend lines. Take them off. Now you know exactly where your support levels are and your resistance level is. This is AI at its finest. So Apple has broken out. I think we're coming up here to around 199 per share on Apple, which happens to coincide with this rising upper band of resistance in blue. Now, in terms of seasonality, going back 43 years, let's tighten this up. That's a little bit too much data. I want more of a recency bias. Let's go to 2000. And you can see how this has changed now over the past 24 years. A lot of data. The month of May is up 60%. That drops down in June. So what we may get here with Apple is a retrace down to this lower band of support, if not this volume shove here at around 180 per share. We closed out the session at 189. So we make it a bit of a retrace next month. But then if we do pull back, I'm a buyer. Why? Because the technicals, we pulled back, we have a higher low, we're holding support levels, and we know that July, it's up over the past 24 years, 75% of the time. That is great information to have. So again, TrendSpider, 35% discount code below. Take advantage of it. Awesome, awesome functionality. So for the first time in a while, bullish on Apple. Let's see how it closed out the day on Friday. It looks like it digested a bit of the move. I think we're rallying up to 193, and then we take a rest on Apple. I'm not a buyer here. I think it's not enough meat on the bone for me. Not yet. I need a retrace, and then I want to put on a bigger position at a lower price. Again, looking at that 180 price point going out into the month of June. I'll probably put the trade on. If you're not currently a member, consider it. We have a 14-day free trial offer. Michael, SoFi. SoFi did, well, different businesses. You can't put them in the same ring. So SoFi, let's go to the monthly chart. They're in finance, each of them, but they're not in the same sector. And even the sector that Lemonade is in, it's not top tier. That, however, is if you take a look at, let's go back to this chart here, Lemonade, you can see that their revenue growth is rising. That's good stuff. Now, in terms of SoFi, I don't think they have any revenue growth. For whatever reason, it's not showing here. They have revenues. I'm not sure why it's not showing here. Anyway, let's take a look at the charts and talk about the charts, monthly chart of SoFi. The last time we spoke about SoFi, I was bullish on it. I remain bullish on it. We're in a very tight descending wedge formation on a monthly chart. So, Paul, thank you very much, my friend. I appreciate that very much. Have a profitable trading week and an awesome night. Thank you for being here. So I think that SoFi is getting ready for a breakout. It tried to, it was rejected. Going to a weekly chart, again, attempted breakout out of a descending wedge formation last week. It was rejected. Daily view. We broke out on Friday. So it looks as though we have some action going on here. They're trying to bid SoFi up. I'm still bullish on it. I think it goes up higher. We're done going down. I think it's worthy of some accumulation, and I would keep a tight stop. We break down to new lower lows. Let's use $6.89 as our support level. That breaks down. We close down below that mark. Out, out, tight stops. Let's check back in really quick with the futures action. All right, so gold gave up a lot of those gains. Crude prices are negative. I'm very surprised to see that, given the events out of Iran and the Red Sea. Let's check back in with the E-minis. They're up 0.10%. RTY, this is the Russell 2000. Unch from the last time we looked at it, up spot 13%. And we'll leave it off with the NQ. Flat. I mean, we've opened up here across the board in equities, and we've held gains. We're consolidating. I think that we see a higher open tomorrow. However, if the news begins to come out overnight that this was an Israeli attack on Iran, all bets are off. So if that does happen, I'm not saying it's going to, I have no idea. If it does happen, yields are going to drop, stocks are going to drop, oil's going up, dollar's going up as well. Gold is going up along with the dollar, which only happens during geopolitical events. So that's the game plan for the new trading week if things go south. Don't forget that 1 hour chart of the VIX I went over. Expect at some point in time, early this week, we're going to get a spike in volatility. Be prepared for it. Understand that it's out there. So if you have cash on the sidelines, want to buy stocks early this week, no, that volatility is like a coiled spring. We're at the lowest lows since 2019, pre-COVID. So be careful. Be careful. Folks, thanks for being here. Like, subscribe. You know the deal. Have a profitable trading week. I'll talk to you soon. Be well.